What's going on, y'all? Hope all is well. Another episode of Combos with your CFP Mario Payne in beautiful Jacksonville, Florida. Hot Jacksonville, but I'll take it. Before we get started, as always, like, share, subscribe to get that YouTube algorithm going. Trying to get the subs up. And you know what? You know who wishes they can get on that YouTube algorithm right now? Disney. But right now, Disney is trending because of ESPN. Do. What happened with ESPN today? So we're going to look at what might be the start of Disney stock going back up, or it might be the start of a spinoff as Disney finds a way to make money, not have as much liabilities. We're seeing all the layoffs. How y'all going to let Mark Jackson go, man? And Jalen Rose. This might be a move that says holla ESPN as Disney finds a way to make some profits, because their profits been painful lately. But let's look at the charts and let's look at what's going on with ESPN, Disney, and Penn Game.
Of course, none other than Penn Entertainment coming off a major deal with ESPN. And of course, they gave us a little bit more insight into their financials as well this morning, taking a look at Penn shares over the past 3 days.
So Penn Entertainment, they're a gambling site like the DraftKings of the world. But they struck a stroke. Do you mind if I? Not this one, though. They struck a $2 billion sports betting deal. The thought process is ESPN, we watch ESPN, but people don't really use ESPN like we used to, right? We see the app just for the scores and keep it moving. But now, if you can place bets through the app, if they can give you the odds more, makes you think about betting more, that can be a play because they are the worldwide leader of sports.
Days and much of that move. Let me just put this on intraday so you can see that move to the upside there. And you're seeing that up by about 12% to start off today's session.
12%? Man, whoever knew about that deal, that's insider trading, y'all. I hope y'all don't. But if somebody did a 12% day, woo! Get to that bag.
Yeah, exactly. We were excited to see that that news cross last night that ESPN is finally coming out with a sports betting product again.
Now, this is a very important key in business and a lesson we could all learn. Protect the bag. Disney stock has been failing as of late. Y'all don't believe me? Let's look at the chart. Now, profiteers. This is long term. As a certified financial planner, we think long term. We think of things usually over a 3 to 5 year time period, not over a 3 to 5 day, not a 3 week to 5 week, long term, right? Disney, 8 at 5 at $3.75. Yes, now to $90 a share, pretty good, right? But it had a huge run in the 2014s. And then before COVID. So we saw some signs, maybe because what's going on in China, right? It was in the lab. All right, no conspiracies today. Down by 47%. But then, of course, it popped. But since it popped, look where it is today, you guys. Look where it is today. Disney down by basically 60%. And look, it is not recovering. Most stocks in the S&P 500 has recovered at least 15% from our October 22 lows. So if it was down, I made 15% back. Now, if I made 15%, I got a long way to go, but a lot of stocks are recovering, especially your large cap stocks, right? Your Disneys of the world. You would think your Apples, your Teslas, your Microsofts, they are. Disney is going down, though. I'm going down. It's going down, y'all. They have not protected the bag. So what happened in 2010 to 2020, they were doing more with theme parks. They were doing more from a tech standpoint. You know, they was building out Disney Plus. First they had Disney Now. With kids, y'all know Disney Now, right? Little Einstein, Disney Plus, but the revenues ain't there. So then a company that they were bleeding money in, ESPN, makes massive cuts, and it just not has helped. So this boosts Penn, so they get into another lane. But if they would have protected the bag and shifted resources and was smarter with how they allocated their money, things would have been better. Now, yes, COVID happened, and a large part of their business was on entertainment and the parks. But from a diversification standpoint, protecting the bag standpoint, they didn't do that, and now they're suffering because of those bad investments and bad decisions that they made 5, 6, 7, 10 years ago. Let's proceed.
Part of that, Penn Entertainment divesting itself of Barstool Sports, selling its stake back to founder Dave Portnoy.
Dave Portnoy,
I was blanking on
David
Portnoy's
Day
first name.
David Day Trader, yeah.
And, so really interesting. We have been seeing.
So you're a DraftKings of the world. If you are in that position, and that position has been running up, you might want to think about just getting out, right? Pocketing your gains. Let's look at DraftKings. Woo! Same thing with DraftKings. Was down by almost 90%. Ooh! Boy, you want to talk about taking a spill. That went from $74 to $9.50. But since then, though, it has rebounded. It's not timing the market, it's timing the market. From $9, now somebody bought it at 10, now it's at 31. They happy. I'd have made 200%. I had $100,000. Now it's at $300,000. I'm happy about that if I bought it late last year. But as we can see, down by 3%. Today, down by 10%. And it's interesting because if we look at Mr. EMA, popping, right? And yeah, so we would have bought it when it was at 20. Now it's at 28 back in May. So from May to now, you go from 20 to 28. That's pretty good. That's a 40% run. I'd take that. But it just shows, though, right? You want to take advantage of things in the industry. So if we're in DraftKings, we might want to look over the next few days if it continues to go down because it's trending up with the EMA. It has bad news, but it might be a good investment to buy it down. I mean, buying something down at 10% when it's trending up, that, my friend, is how we make painful profits.
And he's falling in early trading as well as Flutter, the parent of FanDuel, which reported its earnings today. DraftKings down 7% over the past 2 days. We're going to be talking to an analyst later about this whole landscape. I think it's really interesting.
Why talk to an analyst when you got Mr. CFP, Painful Profits itself? I mean, I do got a fund that's on the New York Stock Exchange. Come on now, y'all. As an investor, we want to take advantage of opportunities. DraftKings might want to look at it. Also, this is a key case point in business. You can be one of the biggest, one of the baddest, one of the best, but if you have missteps, continuous missteps along the way, this is what happens. Even though the market's recovering, even though Disney is a big old brand, Disney is not doing what Disney has done over the years. As an investor, do we invest in Disney? We don't know. Let's see what happens with ESPN, though. Like, share, subscribe for that YouTube algorithm. Let's make some paper profits together, y'all. Peace.
Making no money mistakes, make a payment on your bills and you still late, yeah. Paying for profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes, make a payment on your bills and you still late, paying for profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Been check to check, you know, and it could be different, you know.